Most business owners think a business credit card is just a way to buy things now and pay later. But in reality, it can either become a financial tool or a financial trap. A business credit card is designed specifically for business expenses like inventory, software subscriptions, ads, fuel, travel, office equipment, and payroll-related purchases. The biggest advantage is separation. Instead of mixing personal and business spending together, you create a cleaner financial system. That matters during taxes, bookkeeping, loan applications, and even when trying to build business credit. Here's the good part: most beginners love. Many business credit cards offer rewards like cashback, travel points, purchase protection, free software credits, airport lounge access, and higher spending limits than personal cards. Some even give 0% interest for the first several months. Smart business owners use those intro periods to buy equipment or invest into growth without immediately draining cash reserves. Another major benefit is business credit building. When managed properly, a business credit card can help establish your company's financial reputation. Over time, this can improve your chances of getting larger credit lines, vehicle financing, vendor accounts, or business loans. Banks want proof that your business can borrow responsibly. But now comes the dangerous side nobody talks about enough. A business credit card can create fake confidence. Many business owners start spending money they haven't truly earned yet. Expensive offices, subscriptions, gadgets, ads, travel, team members, and luxury purchases suddenly feel affordable because the payment is delayed. But delayed pain is still pain. Interest rates on business credit cards in the United States are often extremely high if balances are not paid in full every month. And here's a secret many beginners don't realize. Even if the card is for the business, some banks still require a personal guarantee. That means if the business fails, the owner can still become personally responsible for the debt. Many entrepreneurs discover this too late. Another hidden problem is minimum payments. Banks are happy when business owners only pay the minimum amount because interest keeps growing quietly in the background. A small balance can turn into a long-term financial burden very fast. Smart business owners usually follow a simple rule. If the card helps generate more money than it costs, it can be useful. But if it's mainly funding lifestyle inflation or emotional spending, it becomes dangerous debt. The best way to use a business credit card is strategically. Use it for predictable expenses. Keep utilization low. Pay the full balance on time. Track every transaction carefully. Never depend on credit cards to permanently fix cash flow problems. Credit should support a healthy business, not keep a dying business alive. And one final truth. A business credit card does not make someone financially successful. Discipline does. The card simply magnifies whatever habits already exist. If the business owner has control, organization, and strong cash flow habits, the card becomes a powerful tool. If not, it quietly becomes a financial leak that grows bigger every month.